Harmonic Pattern Foundation course. Hi, this is Scott Carney. I want to introduce you to the official Harmonic Trading educational program for the TradingView platform. Harmonic Pattern Identification. Understanding the requirements that define M and W formations as harmonic patterns. What makes patterns harmonic? Proper alignment of proportional harmonic ratio measurements are the key to separating what is a harmonic pattern and what is not. We'll get into how we apply those ratio measurements, but we also combine them with ABCD patterns. Now, we looked at both of these in the last session. This ABCD pattern structure is known as market signature. That is the structural movement, much like the ratios, that define harmonic movements. Now, when we talk about a defined M and W price formation, we are looking at literally these type of structures where the price movements resemble an M or W formation. The problem is we need to differentiate what these look like. Now, we can have two M structures or two W structures, but when we're looking at price charts, these formations are not the same. It's as if we're comparing apples to oranges. Define M and W price structures. Now, when we look at these formations, they do resemble the M and W structure, but we focus on that midpoint requirement because that's the key starting issue of how we differentiate the structures. There are two types of M and W formations. We have retracement patterns and extension patterns. Let's look at this M-shaped bullish retracement formation. On the left, we have a Gartley structure. That's a less extreme. We notice that the midpoint is more at the middle of the structure versus a bat formation, where the midpoint is a smaller retracement higher up in this M formation. This results in a D point eventual completion as a full retest of the starting point of the structure. Looking at the W-shaped bearish retracement formations, here's our starting point. Literally have a W, the letter W formation, where we have this point with the midpoint in the Gartley. That's almost, it's a bit higher than the bat structure, and we'll get into those exact ratios in a minute. But notice that this W structure, this initial point here, the secondary point cannot exceed that initial point. Same with the bat, but the key different point here is this midpoint ratio. That's at a lower level than the Gartley and results in a higher completion from a retest of the starting point. M-type bullish extension formations. On the left, we have a crab, and these extension formations, these type of patterns complete beyond the starting point here. Notice our midpoint, it's a bit higher. This results in a much larger and longer completion for the structure. Versus a butterfly pattern, it's a tighter formation. Our B point that requirement is quite strict and results in a less severe reversal, projected reversal at the completion point. Here in the W-type bearish extension formations, again, we look for this W formation, a low midpoint here that results in a higher completion, a longer extended move as compared to the butterfly structure, a tighter configuration. Again, with the extension pattern, our completion point is above the starting point of the W structure. Harmonic pattern differentiation. Now the key here is to define M and W price structures with ABCD pattern types and proportional harmonic ratio measurements. We looked at those strategies in the first session, but we utilize these measures to categorize random price movements as distinct measured patterns, and that identifies predictive technical and structural signals. These create pattern-specific strategies to identify, execute, and manage trading decisions in advance, and that's important. Now these measurements define what I have created and called the potential reversal zone. It's the exact price zone where 3 or more harmonic trading measurements complete in the same area to identify natural zones of harmonic support and resistance. The PRZ defines the price zone where a pattern completes and an anticipated reversal can occur. The PRZ concept was introduced in my first book, The Harmonic Trader, way back in 1998. But this was the most significant discovery for me to help me create the system to understand the proper rules that defined the true completion of a harmonic pattern. We're talking about a bullish potential reversal zone. It's going to create literally a price range of measures. And those 3 measures are typically an ABCD minimum equivalent formation, our BC extension, and then finally the most important measure of an XA retracement or extension. Now we also utilize harmonic measures to define the stop loss limit, and we define these in advance as the pattern is forming. Our bearish stop loss zone, potential reversal zone, includes the stop loss limit as well. This is really important. Again, notice the XA primary retracement or extension measurement. We utilize that BC extension. That's more a complementary measure, but we combine these with the ABCD. We'll look at some examples here in a minute, but these 3 measures define the price range for the ideal completion of the harmonic movements. Now let's look at some harmonic retracement patterns. We're talking pretty much the Gartley versus the bat. Now the Gartley is probably one of the most well-known of all harmonic patterns, but its interpretation and its definition is pretty strict. We're looking for a midpoint at the B level there to be a 618 of the XA leg. Now this is a strict definition because in my research what I have found is that true Gartleys typically have a B point that is plus or minus 3%. That's a pretty tight requirement. So that essentially means that any B point that is roughly 58 to 64, 65% will qualify as a Gartley. So then we'll look for the minimum ABCD pattern completion with the 786 XA retracement. That's the defining ratio retracement limit. And we also analyze the BC projection ranges. That's between a 113 and a 1.618. But again, that denotes the fact that this pattern is less extreme. It's a tighter configuration. Also note that the C point cannot exceed the A point, and that pretty much assures our M and W formations. Now here we have a bullish Gartley pattern with the ratios, and this is what the exact alignment should be. We look for that B point. That's the first place always to look in these M and W formations. That's going to give you the approximate completion for the D. We look for this B point, remember, plus minus 3%. So 58, 64, 65% would qualify as a Gartley, and we would then assume looking for an eventual completion and projected reversal at this 78.6% retracement. We look for clear AB, CD patterns to converge in this area, and also assess the proper BC extension. These all converge and should converge at that same area to define the potential reversal zone. Here are those measures. And again, this tight configuration, these are mandatory but minimum requirements, but mandatory. We must see an ABCD. We must see a 786 tested before we can even consider the pattern complete. We also utilize the starting point. That's the 1.0 XA retracement. That's a full pullback, and we put our stops just underneath there. Here we've got a British pound US dollar on a daily chart. A very distinct M-shaped formation. Here's a starting point at X to A. Now this starts our A to B, C to D equivalent pattern. Now look at these measurements. Here's the 786 XA retracement. That is actually the lowest number in the bullish harmonic support zone. We have that equivalent A to B, C to D. Right there is the exact point where the minimum equivalent ABCD formation completes. And then we utilize the 127 BC extension. This is a tighter configuration, but all of the numbers are tested, and we focus especially on that 786. Now, why do we focus on the 786? Because look at the B point. The B point is at a 60.2% or 0.602. So that falls within our plus minus 3% range. And so that 618 or approximate 618 at the B point then tells us that our 786 XA retracement is the ideal number, is the maximum number here where we anticipate the reversal and project the potential reversal zone. Also notice we put our stop loss limits underneath the starting point at X. So that's greater than 1.0 XA. Here we've got a chart of the price action in the potential reversal zone. So look at the three measurements, especially that equivalent ABCD. That completes around 129.70, but our 786 XA retracement, that's around 129.40. So these are two mandatory measurements that must be tested. And we wait for all the numbers in the zone to be tested before we even consider the harmonic pattern a harmonic pattern opportunity. And that occurs on this bar right there. We will discuss execution strategies in the next session, but it's important to be aware of the fact that all the numbers must be tested and we must reach our mandatory minimums for each structure. Also notice the red line, we put our stops right below there. That's just beyond that 1.0 XA. A bearish Gartley structure is a W formation, again denoted by the midpoint at B. Should be a precise 61.8% retracement, setting up our eventual 786 at the D point. The PRZ typically looks like this. We're going to get the 786, usually going to be the top end of the harmonic resistance, and then the minimum AB equals CD pattern. Both of these are usually complemented by a BC extension that's pretty tight, 113 to 1618. Here we've got another example of the British pound US dollar. This time it's on a 5-minute chart. That's an interesting note because harmonic patterns form in all markets on all time frames. So the measurement rules that we apply are universal, and we just treat them based upon the time interval that they're identified. That's the primary time frame. Now, this bearish Gartley possessed, first we look at the midpoint. Where is that? That's at a 60.6% retracement. That's less than 1% from our ideal 618 retracement. This sets up our eventual completion at the 786. But it's important to notice where the ABCD completes. That ABCD is a little bit above the 786. It's still a valid pattern. We're just looking to these two areas, these two prices to be tested, these levels to be hit before we even consider the entire pattern complete. And then we utilize the 1618 BC extension, that is from B to C. This distance multiplied by 1.618 gives us the top end of the PRZ. So we know that the entire reversal must occur shortly after hitting this range of numbers, especially with that minimum ABCD where it is. Here we're looking at the price action in the potential reversal zone. So with all of our numbers here, as we're reaching and hitting the zone, we know we're very close to the anticipated reversal as soon as that ABCD and 786 are hit. And we're looking for the change in character right in this price range. Gartley pattern summary. Now again, the Gartley pattern is a distinct MW formation, but it's primarily defined and distinguished by that B point at a 618 plus minus 3%. But as we look at the other patterns, we'll see that this is a much tighter configuration. The AB equals CD and the 786 XA measurement are required to validate the opportunity. Critical, both of those numbers have to be tested. And we utilize the BC projection maximum. That's that 1618 measurement. Again, that denotes that the Gartley is a less extreme, tighter alignment of measurements to validate the structure. We also look for that C point. It's usually between a 382 and an 886, but just as long as it doesn't violate the A point. Most important, the Gartley requires this precise alignment of measures and is strict, if not the strictest, of all the patterns in its interpretation of valid structures. Now let's look at the BAT pattern, because this will exemplify and really illustrate the differences. Because the BAT and the Gartley are similar, but the BAT is different and has more extreme measurements. First, we look, of course, at the midpoint of B. That's typically less than a 618 retracement. Usually it's going to be a 50% or even a 38.2% retracement. The AB equals CD pattern, this is a minimum measurement, but typically it can be extended requiring an alternate calculation. And we looked at that when we reviewed ABCD patterns, but we'll review it in a second here. But remember also that the BC projection range, that has to be a minimum 1.618 measure, but can be as much as a 2.618. So these measures denote a more extreme structure. And then finally, the 886 XA retracement is truly the defining level of the whole completion point for the pattern. This is closer to the starting point at X, and it's a deeper retracement than the Gartley. Let's take a quick look at the alternate ABCD patterns, because we reviewed these in the first session, but it's important to remember that the ABCD structures are a relatively new concept within technical analysis. The refinement of alternate structures was released in my first book, The Harmonic Trader, but it was an attempt and is an excellent framework to assess when CD legs get extended. Alternate ABCD patterns are longer than the normal equivalent version, and they're multiplied by a harmonic ratio. This results in a structure, a harmonic structure, that can be applied to BAT patterns when the equivalent ABCD doesn't line up. Now, the alternate AB equals CD is not as important as the singular equivalent structure, that singular AB equals CD, but when we look at patterns such as the BAT, we'll see how effective it is in complementing and defining the potential reversal zone. Here's two illustrations. Again, just notice the extended nature. Here's the A to B leg. Okay, we look at that distance. We multiply that by 1.27 or 1.618 to get the alternate completion points for these structures. Here's the bearish version. Again, if A to B was 10, we would multiply that distance by 1.27 or 1.618. So if that's 10, an alternate 1.27 AB equals CD would be 12.7 off of the C point. So let's bring that into the bullish BAT illustration here, because we can see that the B point that's higher up relative to the X point will create this extended CD leg. Now the minimum ABCD, that's always needs to be considered, but we're looking for this B point that's around a 50% or less, and it usually results in an 886, an 88.6% retracement of this XA leg. We look at an alternate ABCD, and we look at more extreme BC extension measures. This minimum 1.618 extension exemplifies the extremity of this formation. Now when we're looking at the potential reversal zone, the key numbers are the minimum ABCD, that minimum 1618 BC, but most important is that 886. That 886 is a relatively new number that I introduced in my Harmonic Trading Volume 1 book, but incredibly effective in these structures. We also consider the stop loss limit because we utilize a 1-1-3 harmonic ratio. So we're looking for the reversal right at the 886, but for stop loss purposes, we're going to put it just beyond this 1-1-3 as we're entering the trade. On this chart, we've got a daily Euro USD bullish bat. Very clear structure. Initial starting point at X here, had a strong move up, and then notice our A to B, C to D formation. A very clear, distinct M pattern. That sets up our three measures. Notice the B point first and foremost. That's at a 48.6% retracement, a 486. Very close to the 50, and it qualifies. So as soon as we see that, and as this is forming, and as the CD leg is declining to approach the zone, we know that this is going to reach for an 886. That's the definition of the structure. Then we look at the other measures, the ideal harmonic measures. In this case, we have a 2.24 BC extension, and we look at the alternate 1.27 AB equals CD. So the AB to CD would complete the equivalent structure, would complete about here, around 108.50. But the 127, that is 1.27 multiplied by this distance, gets us down here about 106.50 level. That complements the BC extension and, most importantly, that 886 XA retracement. All of our stop loss considerations are placed well below X beyond the 1.13 extension here. Here's a chart of the price action in the potential reversal zone. Look at those three measures coming together. That defines a very tight area where we can anticipate at a minimum the stabilization of this downtrend and look for other factors to confirm the reversal. The 886 being the most important point in that potential reversal zone is usually going to trigger where we see a harmonic reaction. That is, immediately after hitting the 886 retracement, we're typically going to see some type of individual change in the character of price action. Now, we'll look at these strategies when we talk execution, but it's important to note the whole concept of a zone and focusing on this zone for a change in character to indicate a larger reversal at hand. Also take a look at the stop loss limit just beyond that 113. Here we've got a bearish bat pattern structure. Again, a W formation. Here's the A point, B point at a 50 or less. C point can be a 382, can go down as low as an 886, but again, the C point cannot go below the A point. That sets up 3-4 points here to our fifth point at the D, where it completes at an 886 retracement. This also sets up the 1618 minimum BC extension and, again, an elongated ABCD pattern. The bearish bat potential reversal zone typically will have that 886 as the highest number in the zone. But as soon as that's tested, and as long as we have a minimum equivalent ABCD, we know that we have a reversal in the works. Stop loss goes right above that 1.13 XA extension. Here we have a great bearish bat on a 60-minute chart. This is dollar yen. And again, look at the W formation, and we go straight to the B point. Where's your midpoint? That's the first question you always have to ask yourself. Great W formation. The B point is going to tell me where to expect the eventual completion of this formation. B point, that's at a 45.7% or 0.457. we typically want to see that the bat at a 50 can be as low as a 382, but that's a wider range between 382 and a 50, but this qualifies. That sets up our other measures. Most notably, we look at that 886. That's a deeper retracement, almost coming back all the way to the starting point. And in this case, we're utilizing an extended 1.618 ABCD. So this distance from A to B times 1.618 puts you all the way up here around 115.30. Your 886, that was about 115.40. And then your other harmonic measure, that's a 224. Okay, that comes in a little bit lower. That defines three numbers, three harmonic measures that define the ideal range. Now it's important to note that we utilize the ideal harmonic measures because this is where the harmonic levels, the minimum harmonic levels exist to define the structure as harmonic. Of course, we're not going to reverse exactly on each measure. That's why we look at the entire zone and treat the zone as the area for the anticipated reversal. Here's a great chart of the price action in the potential reversal zone. And look at how the individual price action began to stall immediately after testing all the numbers in the zone. Here on the 60-minute chart, we've got the three ideal harmonic measures to define this area between 115.15 roughly and about 115.35, maybe as high as 40, where the entire harmonic resistance marked the completion point for the structure. Bat pattern summary. Now again, much like the Gartley, we're going to always look at the B point. In this case though, we're looking for a 50% retracement because that defines the best bat opportunities, and we'll usually trigger an 886 at the D point. Remember, the bat does consider an ABCD minimum requirement, but frequently employs the alternate 1.27 or 1.618 AB equals CD structures. The BC extension measurement range is between 1.618 and 2.618. This reinforces the concept that the bat is a more extreme structure with a deeper retest of its starting point at X. Also, the 886 XA measurement is the most important ratio and price level to consider at the completion point. And the C point retracement, that can vary between a 382 and 886, but just to maintain the M and W symmetry, it cannot exceed the initial point at A. So let's look at now harmonic extension patterns. We typically look at butterfly versus crab structures. Now the butterfly, it's like the Gartley. The butterfly has a very strict B point, but in this case it's at a 786. We still use the plus minus 3% tolerance limit. But in this case, the butterfly, even though it's tight, its BC projection, that must be at a 1618. We do see equivalent ABCD patterns, and this is a minimum requirement, but most commonly, we're going to see alternate 1.27 AB equals CDs. For the butterfly, the 1.27 XA projection is the most critical number in the potential reversal zone. And in fact, it's the only number because we don't even look at a 1.618. The 1.618 is reserved for more extreme patterns like the crab. And the C point range is between a 382 and an 886 retracement, ensuring the M and W formation. Now here is a bullish butterfly illustration. Note, very clear M formation, but where's the B? Look at the B point at a 786. Okay, so if we see this M formation as we're coming into the CD leg and as it's approaching the D point, because it's at a 786, we know to look for a 127 XA extension at the D point. This combines with a 1618, maybe a 224 BC extension, And also it's going to have an equivalent, sometimes extended, AB equals CD pattern. Now in the potential reversal zone for the butterfly, we want to see a couple key measures be tested. First is the AB equals CD equivalent structure at a minimum. If that is satisfied, then usually we're going to see an alternate structure there. But as long as that minimum requirement is tested, that is one condition that satisfies the pattern. Then we're looking for a minimum 1618 BC extension, can be as much as a 224, but both of these measures converge close to the 1.27 XA. Now that 1.27 XA is also a mandatory requirement before we can even consider the pattern as a valid trade opportunity. In this case, in the butterfly, we utilize that 141 extension, lesser known, but it is the level that we consider and put our stop loss just beyond this area as it works best for this structure. Here we have another example of British pound, US dollar on a 15-minute basis. This time we've got a bullish butterfly. Now notice this M formation. Here's a distinct low up to the distinct high. Down to our B point, look, an exact 786 retracement at B right there. That sets up our 127 extension. That's where we look for it. And we see our other measures. Here is at the exact D point where the 127 completes, we have a 1655. So what we need here is a minimum 1618. So that 16155, that satisfies the structure, as well as the alternate ABCD pattern. So this measure from A to B multiplied by 1.618 converge down here with the 1618 BC extension and the 127 XA. Look how tight those three numbers come together, just under the 128 level and the 127 XA. That's the defining limit. And look at how the price action stabilized quite dramatically in this area. We put our stop loss at the 141 level. This 1414 XA extension has to be the defining make or break for the entire structure. And we put our stop loss limit just beyond that measurement. Here's a great chart of the price action in the potential reversal zone. And this has got all three numbers. Now look at the stabilization and look what happens as soon as we tested all the numbers in the zone. That's why the zone concept is so critical. It gives us an idea of the character of the price action in the reversal, how it responds to these ideal harmonic measures of a 1618 BC, a 1618 AB equals CD, and a 127 XA. So we look at the price action in there, and as soon as it hits all the numbers in the zone, we see stabilization. And now we put the 1414 XA extension here and put the stop loss limit just beyond there. But clearly this stabilized as it aggressively sold off into the zone. Here's a bearish butterfly pattern illustration, a W formation with, again, the B point at a 786. So for all these structures, that's where we look. We look at the midpoint first. We see it's at a 786. Then we assume, as this CD leg is completing, that we're reaching for a minimum 1.27 extension. The bearish butterfly pattern potential reversal zone has all of the critical numbers, but we have to have and realize the minimums of ABCD minimum, 1618 BC minimum, 127 XA minimum. All three of these measures come together to find that harmonic resistance zone, and our stop loss limit is right above that 141 number. Here we've got the S&P E-mini on a 5-minute. This bearish butterfly, really nice W structure, and go to the B point, 79%. very close to our 786. That sets up our three ideal harmonic measures, our 1618 BC, our 127 AB equals CD, and then finally the 127 XA. We know it's a 127 because the B point is within our strict 786 zone. Now here is a great chart of the price action in the potential reversal zone. The 127 at 2402.50, call it 2402, clearly define the top range of the harmonic resistance. And look, we had clear consolidation. Here's an initial reaction. And then we had a retest. But the fact that the price was unable to bust through that D point and then rolled over dramatically thereafter was a clear sign of character change in the trend. Now, we see these kind of opportunities almost every day, these kind of patterns where the price action will change character at the zone. That's what you need to look for. You need to look for that change in character where the price action hits these numbers and is unable to penetrate. The red line here, that's our stop loss limit. We put our stop loss just above that 1414, right above 2406. So this whole area gives us the parameters we need to measure, identify, execute, and manage the position. Butterfly pattern summary. Now again, like the Gartley, the butterfly is a strict interpretation of rules. We look for the 786 plus minus 3%. We also look for that entire PRZ test with the ABCD minimum and 127XA minimum. Now valid butterfly patterns are going to have price action that reverses immediately after testing that 127XA leg, and that's important. We saw that in the prior example where the price action was capped and that rally stalled right in that zone and then rolled over quickly. Utilize the 1414XA. That's the make or break for the stop loss limit. Now remember, butterfly patterns require a strict ratio requirements and occur less frequently than crab structures. It all depends on that B point. So let's look at the crab, because the crab does provide more opportunities, but again is differentiated by the midpoint at B, which is typically between a 382 or 618 of the XA leg. Now in the crab, we look for a 1618 XA projection. This is complemented by extreme BC projections such as a 2618, 314, 3618. Also, the extremity of the structure is denoted by the alternate 1.618 AB equals CD pattern. That's the most common type in this structure. The stop loss is determined by the PRZ alignment and the area of the 2.0. Now, this is a little bit different than other structures because since the crab is extreme, we are going to analyze how the price action tests that area initially at the 1.618, but we will expect price action to go beyond the PRZ, and those can still be valid opportunities. Here we have a bullish crab illustration, this M structure, and we look at the B point at a 618 or less, sets up our other extreme measures, most notably this XA 1618 extension at the D level with an extreme 2.618 as much as a 3618 BC measure to complement what will typically be an extended A to B, C to D, but it's usually going to be a 1.618 AB equals CD. Bullish crab pattern potential reversal zone is going to have your alternate ABCD, extreme BC 2618 to 3618, but the 1618 XA has to be tested. That's a mandatory minimum. Stop loss, again, we're going to see some overspill, price action trading beyond the ideal measures, but the 2.0 level is the defining make or break for this structure. Here we have Aussie US dollar on a 4-hour chart with a really nice bullish crab. Take a look at the midpoint at a B. That's a 64.7, 0.647 of this XA leg. This sets up a 1618 extension. Also note your 3618. It's actually a 368, but we use the 3618 extension ratio. And then notice our 1618 ABCD. That's a bit higher, a little less relevant in this structure. But as long as that 1618 ABCD is there, we do have a valid pattern. And our stop loss limit is beyond the 2.0 XA extension. So that would be under the 71 level when we're actually looking to execute around 71.70. Now here's a great chart of the price action in the potential reversal zone. Notice that the alternate ABCD, not as important. That's up here around 73. Our 3618 and especially our 1618, that's where we want to focus our eyes and look for the change in character, stabilization to anticipate the reversal. And stop loss limit is placed beyond the 2.0 area. Now, bearish crab patterns, again, are W structures defined by the B point with a 1618 at the D. The bearish crab potential reversal zone, you're going to have your three primary numbers. Most notably, that's the 1618 XA leg, your extreme BC, and your alternate AB equals CD. Those all converge, but we're going to expect price action to exceed the 1618, not by much, but it is common. And also price action can be quite volatile as it enters the zone. Despite that character, we want to look at what happens immediately after the numbers are tested, because that's where the real change occurs. Here we have dollar yen on 30-minute. Really nice setup. Beautiful W structure. Look at our B point, almost at a perfect 50%. That sets up our 1618 XA leg. And that is complemented by our 1618 extension here of a 314 BC extension there. And then again, notice the alternate 1618 ABCD. Not nearly as relevant to the other numbers, but a minimum consideration. Now, looking at the price action in the potential reversal zone, notice how the 1618 almost capped it exactly, just under 115.50 with our 314 level, that 314 BC extension complemented around 115.30. Now, if I'm looking at this as a trade, I know my entire zone is between 114.90, 114.95, and then as high as 115.50. With the BC complementing this area a little bit higher, that 314, I'm going to focus my execution at the 1618. And I'm looking for this entire zone to be tested before I consider the harmonic pattern a valid trade opportunity. But if I execute at this 1618 with a stop loss just above the 2.0, then this is exactly where I anticipate the reversal. Now, I went through a lot of information here. It's important to review the retracement and extension patterns because these M and W price structures must be differentiated with the correct ABCD pattern types and the proportional harmonic ratio measurements to define precise trade opportunities. I mean, that's really what this is all about. We can trace out patterns all day long, but we need to get from drawing patterns to an actual harmonic pattern trading opportunity. To do so, we properly got to measure harmonic patterns and optimize execution, identify stop loss parameters, and create an effective trading plan in advance. Now, in my opinion, what I've seen with my students, in particular, that precise measurements prevent trading mistakes. In fact, I believe 80% of all losses are avoided by proper harmonic pattern identification. So take the time to learn the measures, especially focus on the key individual measurements for each structure, that are vital to distinguish them as an opportunity.